On January 23, 2025, President Donald Trump made headlines by signing an executive order aimed at revitalizing the cryptocurrency landscape in the United States, marking a significant turnaround from his previous stance on digital assets. The order, titled Strengthening American Leadership in Digital Financial Technology, seeks to position the U.S. as a global leader in cryptocurrencies and blockchain technology while establishing a regulatory framework conducive to innovation. Key highlights of the executive order. 1. Formation of a working group. Central to the executive order is the establishment of a new working group within the National Economic Council (NEC) tasked with developing a federal regulatory framework for digital assets. This group, chaired by David Sacks, a noted venture capitalist and Trump's newly appointed crypto czar, will include high-ranking officials from various government departments, such as the Treasury and the Securities and Exchange Commission (SEC). The first report from this group is expected within 180 days and will outline recommendations for regulatory measures. 2. National Digital Asset Stockpile. One of the most ambitious proposals in the executive order is the exploration of a national digital asset stockpile. This initiative could involve acquiring cryptocurrencies through lawful seizures by law enforcement, a departure from the past practice where such assets were auctioned off. While Trump had previously promised to retain federal Bitcoin holdings, the executive order does not explicitly detail this commitment. 3. Revocation of previous policies. The executive order revokes several policies established under the Biden administration, particularly those aimed at the responsible development of digital assets. Notably, it prohibits the establishment of Central Bank Digital Currencies (CBDCs) in the U.S. unless legally mandated. This marks a clear shift towards protecting the rights of individuals and businesses involved in blockchain and cryptocurrency. 4. Support for stablecoins. The order expresses strong support for dollar-backed stablecoins, emphasizing their importance in maintaining the U.S. dollar's sovereignty in the digital economy. It aims to create a regulatory environment that fosters innovation while ensuring consumer protection. 5. Regulatory clarity. The executive order seeks to clarify regulations surrounding cryptocurrencies, advocating for access to open public blockchain networks and safeguarding the rights of developers and miners. This approach signals a move towards a more favorable regulatory climate for cryptocurrency businesses operating in the U.S. Industry reactions. The reaction to Trump's executive order has been largely positive within the cryptocurrency sector. Industry leaders have expressed optimism about the U.S. reclaiming its position as a global innovator in digital assets. David Sacks, during an address at a recent event, proclaimed the war on crypto was over, suggesting a new era of support and encouragement for the industry. With the executive order, Trump's administration plans to attract significant investment from the crypto sector, which had shown strong support for his 2024 campaign. Contributions from crypto investors and companies accounted for a substantial portion of corporate donations during the election cycle, indicating a shift in political alliances. Future implications. The executive order represents a pivotal moment in the evolution of cryptocurrency regulation in the United States. By establishing a working group to propose a comprehensive regulatory framework promoting a national digital asset stockpile and revoking previous restrictive policies, the order aims not only to foster innovation but also to integrate cryptocurrencies into the broader financial framework of the country. The implications of this order could be far-reaching, potentially reshaping the regulatory landscape and positioning the U.S. as a leader in the rapidly evolving world of digital finance. As the working group begins its work, stakeholders in the cryptocurrency industry will be closely watching for developments and how they may influence the future of digital assets in America. In summary, Trump's executive order is a strategic maneuver to enhance the U.S.'s role in the global cryptocurrency market, protecting individual rights and encouraging technological advancement. The initiatives outlined in the order could significantly impact the future of digital assets in the United States, signaling a shift toward a more supportive regulatory environment. The executive order signed by President Donald Trump on January 23 2025 represents a significant pivot in U.S. cryptocurrency policy, particularly given Trump's earlier skepticism towards digital assets during his first term. The order, titled Strengthening American Leadership in Digital Financial Technology, outlines a comprehensive strategy aimed at enhancing U.S. leadership in the cryptocurrency and blockchain sectors. Counterintuitive information. 1. Shift from criticism to advocacy. Trump's previous criticisms of cryptocurrencies during his first administration starkly contrast with his current advocacy for the sector. This reversal may seem surprising given his earlier stance, where he labeled Bitcoin as a scam. The change in his approach reflects not only a shift in personal opinion but also an adaptation to the growing influence and financial contributions of the crypto industry, particularly during the 2024 election cycle, where crypto-related donations played a crucial role in his campaign. 2. Formation of a working group. The establishment of a working group under the National Economic Council (NEC) is noteworthy. This group is tasked with proposing a federal regulatory framework for digital assets, which contrasts with the previous administration's more fragmented and reactive approach to cryptocurrency regulation. The inclusion of high-ranking officials from various departments indicates a more collaborative and structured effort to manage and promote digital assets, which is a departure from prior regulatory uncertainty. 3. National Digital Asset Stockpile. The potential creation of a national digital asset stockpile, especially sourced from cryptocurrencies seized by law enforcement, is an intriguing concept. Historically, seized cryptocurrency has been auctioned off rather than retained. Trump's push to maintain federal Bitcoin holdings, although not explicitly mentioned in the order, could signify a strategic shift towards viewing cryptocurrencies as government assets rather than merely illicit gains to be liquidated. 4. Revocation of previous policies. The order's explicit revocation of policies established under the Biden administration, particularly those concerning the development of Central Bank Digital Currencies (CBDCs), showcases a counterintuitive stance. While many countries are exploring CBDCs as a way to modernize financial systems, Trump's administration opts to prohibit their development, reflecting a belief that CBDCs could undermine the private sector's innovation in digital assets. 5. Support for stablecoins. Trump's endorsement of dollar-backed stablecoins aims to reinforce the U.S. dollar's dominance in the digital economy. This support could be seen as counterintuitive, given that stablecoins are often viewed with skepticism by regulators concerned about their potential to bypass traditional banking systems. Trump's emphasis on the importance of stablecoins indicates a strategic alignment with maintaining the dollar's status while fostering innovation. 6. Focus on individual rights. The executive order emphasizes protecting the rights of individuals and businesses involved in cryptocurrency and blockchain technology. This focus on individual rights, particularly the rights of developers and miners to operate freely, contrasts sharply with the regulatory hostility that had characterized previous discussions around cryptocurrencies. This pivot marks a significant change in the narrative surrounding crypto regulation, suggesting a newfound respect for innovation and entrepreneurship within the sector. 7. Regulatory clarity and innovation. The call for clearer regulations is a notable aspect of the order. Instead of imposing stringent regulations that could stifle innovation, the order aims to create a framework that encourages development while ensuring consumer protection. This approach is counterintuitive in the context of the broader regulatory environment, which has often leaned towards caution and restriction. 8. Political backing from the crypto sector. The substantial financial backing Trump received from the cryptocurrency sector during the 2024 election campaign is particularly striking. This support, which included significant donations from crypto investors and executives, suggests a strategic alignment between political interests and the growth of the digital asset industry. The order can be seen as a direct response to this backing, signaling a commitment to fostering an environment conducive to the interests of these stakeholders. 9. Changing attitudes towards self-custody. The executive order's endorsement of self-custody of digital assets represents a significant departure from the previous administration's regulatory stance. By supporting individuals' rights to maintain control over their digital assets without relying on centralized exchanges, the order embraces a fundamental tenet of the cryptocurrency movement: decentralization. 10. Impact on international leadership. The executive order's emphasis on reclaiming U.S. leadership in the global digital asset space is a strategic move that could reshape international perceptions of U.S. policy. While many countries are advancing their digital asset frameworks, Trump's order positions the U.S. as a proactive player rather than a reactive one, which is a notable shift in the global narrative surrounding cryptocurrency regulation. In conclusion, Trump's executive order signifies a transformative moment in U.S. cryptocurrency policy, characterized by a pro-crypto stance that aligns with industry interests while aiming to foster innovation and regulatory clarity. The counterintuitive aspects of this order reflect a complex interplay of political strategy, economic opportunity, and the evolving landscape of digital finance. Trump's executive order, signed on January 23, 2025, titled "Strengthening American Leadership in Digital Financial Technology," introduces several pivotal initiatives that could significantly impact the cryptocurrency landscape in the United States. While many discussions focus on the broad strokes of this order, such as the formation of a new working group and the potential creation of a national digital asset stockpile, there are nuanced aspects of the order that deserve closer scrutiny. Key overlooked elements of the executive order. 1. Formation of the working group. The establishment of a working group within the National Economic Council (NEC) is a critical development. Chaired by David Sachs, the appointee with deep ties to the cryptocurrency and tech industries, the group will propose a federal regulatory framework for digital assets, including oversight mechanisms, consumer protection, and market structure. Significance: this shift in governance indicates a move towards a more collaborative and informed regulatory approach. Industry stakeholders can provide input, which could lead to regulations that better reflect the realities of the market rather than outdated frameworks. This involvement may foster a sense of legitimacy and trust in the regulatory process, potentially encouraging further investments and innovation in the digital asset space. 2. National Digital Asset Stockpile. The idea of creating a national digital asset stockpile potentially derived from cryptocurrencies seized by law enforcement is particularly noteworthy. Significance: if executed, it could represent a substantial shift in how governments handle cryptocurrencies. Historically, seized assets have been auctioned off, but retaining these assets could allow the government to play a more active role in the cryptocurrency market. This could stabilize or influence market dynamics and provide a form of backing for the U.S. dollar in the digital economy. The implications for market liquidity and government intervention in cryptocurrency prices could be profound. 3. Revocation of previous policies. The executive order revokes policies set forth by the Biden administration, particularly those concerning Central Bank Digital Currencies (CBDCs) and a framework for responsible digital asset development. Significance: this move signals a clear pivot away from previous regulatory approaches that emphasized caution and oversight, potentially opening the door for more innovative solutions in the digital asset space. The explicit prohibition of CBDCs unless mandated by law could also indicate a prioritization of decentralized and private forms of digital currency, contrasting with global trends towards state-backed digital currencies. This might enhance the U.S.'s competitive edge in the crypto landscape by encouraging private innovation over state control. 4. Support for dollar-backed stablecoins. The order's backing of dollar-backed stablecoins emphasizes the administration's intent to maintain the U.S. dollar's dominance in global digital finance. Significance: this focus on stablecoins could encourage their development and adoption, providing a more stable medium of exchange in a volatile market. As the world increasingly moves towards digital finance, dollar-backed stablecoins could serve as a bridge for traditional finance and the burgeoning crypto market, reinforcing the dollar's status as the world's reserve currency. 5. Regulatory clarity and protection for developers. The emphasis on creating clear regulations and protecting the rights of developers and miners highlights an important shift towards legitimizing and supporting the cryptocurrency industry. Significance: by providing a framework that protects individual rights and promotes innovation, the order may foster an environment conducive to growth and development in the blockchain sector. Regulatory clarity can help to reduce the fear of enforcement actions that have historically stifled innovation in the crypto space, allowing U.S. companies to compete more effectively on the global stage. 6. Political and economic context. The backdrop of this executive order is the substantial financial support that Trump received from the crypto industry during the 2024 election campaign. Significance: the political implications are significant, as this order could be seen as a payback to the industry for its support. This relationship may lead to further collaborations between government and industry, which could shape not only policy but also the future of technological innovation in the U.S. However, it also raises questions about potential conflicts of interest and the ethical implications of such close ties between political leadership and private industry. Conclusion: Trump's executive order represents a transformative moment for cryptocurrencies in the U.S., likely driven by both economic imperatives and political support from the industry. The overlooked elements: the working group's formation, the potential stockpile, the revocation of previous policy support for stablecoins, and the focus on regulatory clarity, highlight a shift towards a more favorable environment for cryptocurrency and blockchain innovation. These changes could redefine the U.S.'s position in the global digital asset market, emphasizing innovation, individual rights, and a renewed commitment to maintaining the dollar's central role in the digital economy. The implications of this executive order extend beyond immediate market reactions. They suggest a broader strategy that could shape the future landscape of digital finance in America and position the U.S. as a leader in the next phase of financial technology evolution. 1. Creation of a national digital asset stockpile. The executive order proposes establishing a national digital asset stockpile potentially sourced from cryptocurrencies seized by law enforcement. This initiative signifies a transformative approach to managing digital assets at a federal level and could impact market dynamics significantly. By retaining and potentially using these assets, the government may influence the cryptocurrency market, promote stability, and enhance its legitimacy. The proposal also suggests a strategic pivot from previous practices where seized assets were auctioned off, presenting an opportunity for the U.S. to consolidate its holdings and assert authority in the digital asset landscape. 2. Formation of a regulatory working group. The establishment of a new working group within the National Economic Council (NEC) represents a critical step towards creating a cohesive federal regulatory framework for digital assets. This group, chaired by crypto czar David Sachs, aims to evaluate and propose regulations addressing market structure, oversight, consumer protection, and risk management within 180 days. This initiative is vital for fostering a predictable regulatory environment that can encourage innovation while safeguarding stakeholders, including consumers and businesses involved in the cryptocurrency sector. 3. Revocation of previous policies and emphasis on stablecoins. Trump's executive order revokes several policies from the Biden administration, particularly those related to Central Bank Digital Currencies (CBDCs), thereby signaling a clear regulatory direction favoring the private sector in cryptocurrency. The explicit prohibition of CBDCs, unless legally mandated, allows the private sector to innovate without governmental interference. Additionally, the order emphasizes support for dollar-backed stablecoins, which could reinforce the U.S. dollar's dominance in the digital economy, ensure consumer protection, and promote a stable digital asset framework. For positive industry reception and market implications, the executive order has been met with optimism from the cryptocurrency sector, with industry leaders expressing relief at the shift towards a more supportive regulatory environment. Comments from officials like David Sachs indicate a collective desire to move past the war on crypto that characterized previous administrations. This positive reception could lead to increased investment in the U.S. digital asset market, potentially unlocking a $1 trillion asset pooling initiative. and fostering a more robust technological ecosystem supportive of innovation and economic growth. The implications for market stability, investment, and technological advancement are substantial, positioning the U.S. as a leader in the global digital asset landscape. 1. The Gold Reserve Act of 1934. This legislative act was a significant milestone in the U.S. government's approach to gold and currency. It required all individuals and businesses to deliver their gold to the Federal Reserve, effectively consolidating gold ownership under government control. The act aimed to stabilize the economy during the Great Depression and included the establishment of a national gold reserve. The government's control over gold reserves allowed it to manage the currency supply and enforce monetary policy. Similar to Trump's executive order on cryptocurrencies, the Gold Reserve Act marked a significant shift in government policy towards asset management and control. 2. The Emergency Banking Act of 1933, enacted during the Great Depression. This act allowed the government to stabilize the banking system. It provided the president with the authority to regulate banking operations and facilitated the reopening of solvent banks. The act also established a system for federal deposit insurance, protecting depositors' funds. The formation of a regulatory framework by the government to manage a critical sector of the economy parallels the establishment of a working group in Trump's executive order to regulate digital assets and cryptocurrencies. 3. The Glass-Steagall Act of 1933. This act separated commercial banking from investment banking and established regulations to prevent financial speculation that contributed to the 1929 stock market crash. It was a response to the financial instability of the time and aimed to protect consumers and the economy. The Act's regulatory framework is reminiscent of the proposed regulatory clarity in Trump's executive order, which seeks to create a favorable environment for digital assets while addressing risks associated with the emerging technology. Future outlook: predictions for the impact of Trump's executive order on cryptocurrency. In the wake of President Donald Trump's January 23, 2025 executive order aimed at strengthening the U.S. position in the cryptocurrency sector, several key developments are likely to unfold in the coming years. This order, which marks a significant pivot from Trump's previous stance on cryptocurrencies, is poised to reshape the digital asset landscape in the United States and potentially have global repercussions. Here are some predictions regarding the future implications of this executive order. 1. Establishment of a regulatory framework. The formation of a working group within the National Economic Council (NEC) will likely lead to the creation of a comprehensive regulatory framework for digital assets. Within 180 days, the working group is expected to propose guidelines that balance innovation with consumer protection. This framework could serve as a model for other countries, influencing global regulatory standards for cryptocurrencies and blockchain technology. 2. Resurgence of U.S. crypto innovation. With the support for cryptocurrencies and blockchain technology reaffirmed, the U.S. is likely to experience a resurgence in innovation within the cryptocurrency sector. This could manifest as an influx of venture capital into blockchain startups, the establishment of new crypto exchanges, and the growth of decentralized finance DeFi projects. The renewed optimism might attract talent and investment back to the U.S., which had been waning under stricter regulations from previous administrations. 3. Creation of a national digital asset stockpile. The exploration of a national digital asset stockpile could lead to the U.S. government becoming a significant player in the cryptocurrency market. If the government retains and manages seized cryptocurrencies rather than auctioning them off, it could create a substantial asset pool, valued potentially at over $1 trillion. This could not only affect market dynamics but also strengthen the U.S. dollar's position as a dominant currency in the digital economy. 4. Support for stablecoins. The executive order's emphasis on dollar-backed stablecoins is likely to facilitate their growth. By creating a favorable regulatory environment, the U.S. could see increased adoption of stablecoins, which could enhance the efficiency of payments and cross-border transactions. This emphasis may lead to partnerships between stablecoin issuers and traditional financial institutions, potentially reshaping the landscape of digital payments. 5. Global influence and leadership. With the U.S. reasserting its leadership in digital assets, other nations may look to the U.S. for regulatory guidance. This could lead to the establishment of international standards for cryptocurrency regulation, fostering collaboration among nations. The U.S. may also leverage its position to influence global policies, driving the conversation on digital currencies, particularly in the context of competition with countries like China, which has been aggressive in its own digital currency initiatives. 6. Impact on central bank digital currencies (CBDCs). The prohibition of CBDCs, unless mandated by law, could lead to a fragmented approach to digital currencies globally. Countries that are developing CBDCs may see the U.S. stance as a cautionary tale against centralization, potentially slowing their initiatives. Alternatively, this could spur a pushback from those advocating for CBDCs, leading to a broader debate on the role of government in digital finance. 7. Increased consumer protection and rights advocacy. With a focus on protecting the rights of individuals and businesses involved in cryptocurrency, we can expect a rise in consumer protection measures. This may include more robust regulations for exchanges and platforms, ensuring they maintain high standards of security and transparency. Advocacy for self-custody rights might also gain traction, empowering users to maintain control over their digital assets. 8. Potential challenges and backlash. While the executive order has been welcomed in the crypto community, it may face opposition from more traditional financial sectors and regulators who remain cautious about the risks associated with digital assets. The push for regulatory clarity will likely bring to light concerns regarding fraud, money laundering, and consumer protection, potentially leading to a tug-of-war between innovation and regulation. 9. Market volatility and investment trends. As regulatory clarity emerges, market volatility may initially increase as investors react to new policies and frameworks. However, in the long term, a more stable regulatory environment could lead to increased institutional investment in cryptocurrencies, driving prices and market cap higher. The U.S. could see a boom in crypto-related financial products, including ETFs and futures, attracting a broader base of investors. 10. Long-term economic impacts. The integration of cryptocurrencies into the broader financial framework could have far-reaching economic implications. Increased adoption of digital assets may enhance the efficiency of financial transactions, lower costs for consumers and businesses, and stimulate economic growth in the tech sector. Additionally, the U.S. could see a new wave of tax revenue generated from cryptocurrency activities, further legitimizing the sector. In conclusion, President Trump's executive order marks a pivotal moment for the cryptocurrency landscape in the U.S. and beyond. The coming years will likely witness significant shifts in regulatory approaches, market dynamics, and technological advancements in the digital asset space, positioning the U.S. at the forefront of this evolving industry. As the landscape develops, stakeholders must remain agile, adapting to the changes while navigating the opportunities and challenges that arise in this rapidly growing sector.